This is Paul with your weekly report. In a moment we'll give you the details on a couple of very nice, successful trades we had last week, but let us open first with the market news in a nutshell. We're glad to welcome you again to outpaces.com, where you can get great market analysis and information to bulletproof your investments, achieve diversification and proper asset allocation in your portfolio, and most of all, work on some high probability hands for very profitable trades. Last week we had another sequence of strong moves in the market, driven by the conflicting news on various big topics, such as the 15 billion bailout of the auto industry, the 26-year high unemployment report, and oil prices climbing up again. All this commotion actually resulted in almost no change for the week for the Dow Jones and the S&P 500, while the Nasdaq closed a touch above 2% up. We took advantage of the fallback the market had in the second half of the week with these two trades on Wednesday and Thursday. We utilized a November put option on the Qs as shown in this chart. The first trade was actually very short, less than half an hour. We closed it, behaving very cautiously given the high volatility of these times, when the real-time indicator turned against the trade, but we still gained 11% on it. The second trade was a bit longer, relatively speaking, and delivered a 29% profit in about 1 day. So the standard $2,000 amount that we utilized in these reports grew to $2,744. For each trade we trade however many options contracts the $2,000 can buy. That gain equals 37% of the initial capital. Great results, once again. We have shown earlier the weekly comparison chart of the equity indices. This is the year-to-date comparison chart with the three indexes down anywhere between 35 and 40% for the year. The corresponding weekly price charts are reported here, showing all three indices in a mild counter-trend move, but still in negative territory long term. In the sectors arena, energy and materials were the winners for the week, while financials lost another 5%. Financials are now down 60% year-to-date. Foreign stocks did better last week, with Germany, Hong Kong, Taiwan and Japan up 8 to 10%. Only Japan is a bit above the S&P 500 year-to-date. All others are down an extra 10% compared to the US stocks. Crude oil rose a bit last week, but we're still bearish long-term. Gold had a spike up, and we'll have to see if it will be capable to march through some strong resistance now. The weekly comparison chart shows the fast move of crude oil, up 12% this week, although it is down about 50% year-to-date. This is it for this week. Come visit us at outpaces.com and share the site with your friends. Outpaces.com is where you can get ideas for the year-end portfolio adjustments and work on asset allocation and portfolio diversification to better respond to whatever the market is going to deliver next. We'll see you in the market. Happy trading!